Hello, Tyler Chianelli here, CEO and founder of Option Trading Coach and head trader at Options Trader Club. And in this video, you're going to learn the top investor mistake that cost me $1.3 million. Now that may sound far-fetched to you, but in a minute I'm going to give you live email proof into one of my old accounts that I dug up that I totally forgot about this trade. And the first tip I want to give you, whether you're in high school, which is when I made this trade, or whether you're nearing retirement, you have to have a plan of action. You have to have a plan of action. Number two, you have to document the process using a spreadsheet, a track record, so you can look back at your trades, because there's probably going to be a lot of them if you're just getting started, and you can see where you failed and where you succeeded, and then you can grow as a trader. And number three is you have to embrace a long-term wealth-building investor psychology that's based off of proven fundamentals, PE ratios, growth rates, things that have stood the test of time. Just like Warren Buffett says, he's a buy and hold kind of guy. And there's a lot of traders out there, including myself, where we like to have short-term profits, whether you're in it for a couple hours or a couple days or a couple weeks or months. That's all well and good, but you have to allocate. I believe you have to allocate a large portion of your overall investment portfolio to long-term stocks, things that do not have expiration dates. Because I do love options, and options are great, but you have to also embrace the whole world of finance, which includes stocks, annuities, mutual funds, real estate investment trusts, things that can really encapsulate a successful portfolio. So I want to go ahead and jump into this email that you can see the live proof of the actual timestamps when this trade was made, and you can kind of see what happened. Let's jump in.
Okay, I want to show you this real fast. I just recently recovered my Yahoo email, and this is a great example of showing you the legitimacy of what I'm about to really explain here. So you can see, and I totally forgot about this. Totally forgot. So I'm not trying to beat myself up anymore because this is a really insightful thing. But right here you can see I have a smart alert from E-Trade when I was trading on them actively as a younger investor trader. But you can see on Friday, October 15th at 12:48, probably the lunch hour at high school when I was a senior, I bought 900 shares of Netflix at $10.65 per share executed. This is a partial fill because I bought 1,000 total, and you can kind of see here if I just exit out, you can see that was filled on 10:15, and then the other 100 right here was filled right after on 10:15. So 1,000 shares purchased October 15th, 2004. And you're already going to see where this is going to go, but you can see in the same screen that I sold them a little longer than a month later for about $1,000 profit. And now that I look at this, I remember this trade, and I remember being 18 and making $1,000 in a month or so, putting money to work, and really starting to get very much interested in the stock market. Really, it was a year or two before that, but really 18 was when you're trading like this. And this was before I learned options. And this is right, a couple years before I learned options, or a couple months probably. But this is a very good example of looking back and reflecting and learning from your mistakes, and then taking that example, which we just saw here. I'm going to get out of here now.
So as you just saw, that email proof of buying 1,000 shares of Netflix at $10.85 per share before it had a stock split for 7-for-1 in 2015, that would be an equivalent of 7,000 shares today. And of course, the stock price changes as time moves on and so forth. And I don't want you to think that that's something that, a lot of traders deal with this type of thing. And you know what? There's going to be periods of time where you're going to have a great profit. Like say that trade I was in for 5 years, and say it's up like $100,000 or a couple $100,000 off of an initial like $6,000 investment. It's totally fine to take your profits because you really never know. None of us knew back in 2004 that Netflix is going to be the company that it is today. So I don't want you to think that this is just like something that you can always do, or if you always buy and hold, you can have success. That's not what I'm saying. What I'm saying is embrace a long-term trading, investing psychology, and have the discipline and have a plan of action so that if you're in a trade and you're up a lot of money and you see fluctuation and you want to take your profit, have a plan to get back in. Because when you can get back in, you can recalibrate things and you can still manifest that longer term appreciation of your asset. Very important that you understand that.
I want to show you the actual chart, but taking that example and saying, all right, so let's explain this. You just saw the executions. This was back in 2004. Before I start diving into the price action and explaining how this all works, you can see that there was a split. So a split is basically when a stock cuts itself in half, or in this example, 7 for 1 means every 1,000 shares that you have, you get 7 more shares. So I was explaining there's 2 types of splits. You have a reverse stock split, which is often a bad thing when companies buy back their shares and they take shares from you. This is a standard stock split, which you often see in startups, new IPOs in a couple years, or just companies that are trying to recalibrate their float of outstanding shares. So you can see 7 for 1, July 2015, which was around the stock price was about 420, 450, maybe 500. So I remember this now because I'm going to show you another segment here where I just logged into my other account because I don't want you to think I never made money on Netflix. This is a painful example when you realize they had 1,000 shares of Netflix in 2004. No expiration. These are not options. These are shares that you should definitely allocate a portion of your portfolio, I would say a large portion of your portfolio, into long-term growth investments, stocks, equities, ETFs, treasuries, things that do not expire. This is a perfect example of letting your money work for you and not being so on top of it by watching the fluctuations and worrying about change. Give yourself the peace of mind and let it work. That's what I did wrong. Was I was watching it too close, and of course I was 18 at the time, or and I was in senior year in high school. So $1,000 a month for a kid is a lot, and that's definitely the wrong mentality. I'm telling you, for the guys and gals that are watching this that are in your teenage years, let it work. Let it work, and you'll thank yourself in 10 or 15 years from now. Because although this was an example of missed opportunity, because this 1,000 shares after the stock split, so if you're in a non-margin account like an IRA, this is still a smart trade to do in an IRA, in the next 15 years, finding the next Netflix, it would be about $11,000 capital tie-up, or buying power risk, you can call it your margin amount, your total capital investment. $11,000 is the money you put up to get in. With a margin, 50% margin account, I was able to leverage that and only tie up about $5,800 in capital. So still a large portion of my account, which is the other thing I would say, is do not over allocate your account. If you can have trades that are in a reasonable money management fundamental and formula, which I talk all about inside the Trade Mastery program, then you can basically let it go. Let it go and let it work. So 2004 stocks at 1085. You can kind of see how minuscule this looks when we're at 5 a share, but this is really supposed to be 35 a share, right? Because with that 7 for 1 stock split, really multiplies this stock by 7 times to give it an accurate representation of what you just saw in the email alerts for E-Trade when I got executed the trades. So this stock was about $10, $15 in this area. This was when I got filled on this bar. This is the week of 10/11/2004. You can see the date right here. That's 10/11/2004, 10/18. So it was right in the middle here. And then I sold it over here. Nothing. Just very minuscule. Still $1,000, but long term, you're kicking yourself. And I think the best thing that we all can do from this is to really take it as a lesson and not let it happen in the future. So this 1,000 shares, if you didn't do anything, which of course the outcome for me, but that's 7,000 shares, and that's the top investor mistake, is not being patient. That's the top thing you have to be cognizant about, is let your mind at ease and be patient and understand that it's a process that takes time to get the big, huge returns. 98% of the time. Yes, there's shorter term trades that you can do, but 98% of the time it's long-term growth, compound wealth building. So 7,000 shares equivalent today at 178.43, which is definitely a recent little pullback that we saw. If we look at a 1 year, you can see we hit a high of 191 after the earnings announcement for Q3 2017. 7,000 times 178.50 is $1.25 million. if you were able to time it, just for full insight, at 190, you're looking at $1.33 million off of a $6,000 trade for me, which I had, and I sold it. So what do you do moving forward? Well, first, I want you to know that I have another YouTube video that you probably have seen because it's got nearly 500,000 views now, if not more. But I did get involved with Netflix in 2013, and I did make about $140,000 or an 822% return using the leaps. And this is an example where, yes, this is a great trade. The cost was like 17.5 and made about 144. I think the video that I shot is actually a little bit skewed, but this is the accurate snapshot out of the statement that I have here. You can see that was a pretty decent year. And there's other examples that I'll show you later about that inside the Trade Mastery program. But as far as this example now, this is the top investor mistake that you have to be very much in control of. And that's being patient and not rushing, not being impulsive, not looking for instant gratification, but preparing and really capitulating your mind to think of delayed gratification, discipline, and having the dedication to see it through by having a plan and letting it work. So those are the things that I wanted to show you this. Moving forward, what's the next Netflix? That's the next question. And I'm going to have another follow-up video in this same series of context of long-term wealth creation, because I do a lot with, a lot of you know I do a lot with leaps, a lot with income spreads, verticals, calendars, diagonals, butterflies a little bit, all these different strategies. But a lot of times it's more intuitive, and this is a great example when you keep it simple and just focus on a few things. Long-term wealth with stocks, maybe you sell some vertical spreads for income production and do some calendars with that. It's all about having a plan and then having a tracking mechanism to really be on top of it and be able to adjust as necessary. Because if you can be in control and know where you're messing up and where you're not having success in a visual blueprint with a very detailed spreadsheet, as I've created for all my members and clients, it's going to help you moving forward. That's the big takeaway. This was never documented. It was just a trade that was put on and sold for a month later. If I saw it in a spreadsheet and you're looking at your spreadsheet every month and you see your portfolio of digital currencies, stocks, options, bonds, ETFs, mutual funds, real estate, you see all of your assets, then you can make proper decisions. So that's the takeaway. Get ready for the next video. If you want to head over to tradingmasteryprogram.com, I've built an entire program that encapsulates everything I've learned the last 15 plus years as a full-time stock and options trader. I welcome you to come check it out. There's a free 7-part video series called the Wall Street Discovery Series, and I think you'll really enjoy it.
So in closing, I just want to say that get excited. Find that next Netflix so that in 10 or 15 years from now, you can email me or send me a message and say, I invested in XYZ stock today and now it's worth 10,000% more than my initial investment, because they are out there. Whether you're using options to leverage your capital and get better leverage through your strike price selection, your expirations, and being able to use that, which is a very powerful tool, do it. But I want you to head over to tradingmasteryprogram.com because this program encapsulates my entire trading career. And I think it can help you set yourself up for success. And on top of that, if you head over to tradingmasteryprogram.com, there's a special offer under this video that if you click the link, then you can get a really special offer that I think you're really going to enjoy. So until next time, stay excited, stay dedicated, stay involved with the market, and I'll see you on the next video. Thanks so much.